Let's take a look at what happens when the second ALMA indicator has its settings changed to cover a longer duration and wider price range. The resulting crossovers with the first ALMA indicator at default settings representing a baseline and coverage of shorter-term events reveals mostly less than adequate results that are less effective in identifying changes in sentiment in the short and long term. It's not much of a surprise since this indicator is best suited for short and sharp movements. Drastically increasing the window size for much broader coverage does actually identify some major swing points and breakouts. However, it will of course have a greater lag in reflecting more current market events, especially when there is more horizontal range-bound movement that contains more frequent swing points. So in this situation, the first ALMA indicator in pink is representing a baseline of more short-term market activity, while the second ALMA indicator in purple is representing market activity in the longer term. The combination of these two extremes results in intermediate coverage of trend changes that isn't quite as responsive as focusing the pair of ALMA indicators on the chart in the medium to short or just short time range we covered with previous examples. These aren't terrible outcomes, they're just mediocre results in terms of more quickly identifying rapid trend changes. For example, the first shorter-term ALMA indicator in pink will generally stay under the second longer-term purple ALMA indicator during bearish cases and go over it during bullish phases, though usually the intersection of these two ALMA indicators will happen closer to the middle of a trend rather than near the beginning.